here on stage with me, as the title suggests, I've got three lovely gentlemen, but three experts in the day-to-day usefulness of blockchain technology and stablecoins. And as we know, with any technological advancement, particularly in financial services, there are risks, setbacks, challenges associated with rollout, adoption, and so I hope to touch on that, on those aspects of their businesses today as well. I think these three gentlemen run very different businesses focused on different markets across our region here. But the one thing that they do have in common is that they have teams, some large, some small, some growing very, very quickly, but teams focused on solutions which are disrupting financial flows, particularly financial flows associated with the well-being and financial prosperity of the markets in which they operate. So making those flows more efficient, transparent. And so without further ado, I'd love for the panelists to please introduce themselves. Maybe we start with Wei, a little bit about their businesses, and if you like, you can touch on sort of how you're working with the Circle teams as well.
Hey everybody, thanks for having me here. My name is Wei Zhou. I'm currently the CEO for Coins.ph. A little bit about Coins. We are the largest and the first licensed VASP, which is a cryptocurrency exchange in the Philippines. And we're also one of the earliest sort of licensed e-wallets in the country as well. We currently have about 15 plus million users in the Philippines. And it's basically, the way I pitch it to people, it's kind of like a Coinbase plus a Venmo sort of in one. You can use it to make day-to-day payments, send money to your friends. You can also basically use it to buy crypto and invest in Web3. So a little bit of background by myself. So I actually led the consortium to buy Coins in first quarter of last year. And then prior to Coins, I was actually the CFO at Binance for about 3+ years. And sort of the role there mainly is basically, building the business and then sort of landing in different places. And then happily sort of landed myself in the Philippines.
Great. Khibar?
Sure. Hi everyone, my name is Khibar. I am the Chief Innovation Officer at DeeMoney. We've got a payment company in Thailand where we do cross-border remittances. We are fully licensed under the Bank of Thailand. We've got the e-wallet license and the e-money license and a remittance license and FX license. So we're really into the compliance in Thailand. We also have a Web3 initiative called Money Switch, where we go in and we integrate with different payment networks and payment flows, and we provide what we call just-in-time liquidity to money service businesses to help them with their pre-funding requirements. So cross-border payment transactions can settle in real time. And part of that journey we do in USDC, which allows us to offer a value to our customer of money never sleeping, essentially, which is key to a lot of remittance companies because when money slows down across borders and it's not in the right place at the right time, there's customers are not happy, you're taking on FX risks, there's a lot of complexion that comes into that. So we're very, very focused on the logistics of money and making sure money is in the right place, the right time, for the right people, right? And a little bit about myself, I'm at core a software engineer. I build products and write a lot of code, and in the last few years I've worked a lot with my colleagues at DeeMoney who've taught me a lot about the fintech space, so I've been able to bridge Web3 and fintech and build products and services that are very much aligned with a lot of the conversations we've had here, where it's a pure fintech experience in the front and all of the complex things that has with blockchain to do is gone in the back. Yep.
Thanks. Kev?
Hey everyone, thanks for having me here. My name is Kevin. I'm one of the co-founders of Reap. A little bit about Reap. We are a cards and payment technology business. Specifically what that means is we have issuance and payments capabilities within the region. We issue on the Visa network. We have our own proprietary corporate expense card that works with both Web2 and Web3 businesses in the sense that we allow them to settle with us and repay us using stablecoins. On the technology side, we also license out part of our infrastructure via APIs to other folks who may want to build other use cases using our APIs around payouts, around card issuance as well. Yeah, it's a little bit about us.
Great, thanks guys. And before we jump into the first question, I'd love to go a little bit deeper on your businesses, because I know I'm quite interested in how fintechs evolve over time, because I know Kev, Reap started as quite a different business with a different focus, not initially digital assets. And then you had some rock stars in the business that apparently transformed things. So I'd love to hear, and I know Coins also started as quite a different offering with sort of different goals in mind. I'm not sure about DeeMoney, Khibar, but would love for you guys to add a little bit more, a bit of background, I guess, as to where the businesses started.
Sure. I'll jump in here. I think it's I'll actually address I think two issues. One is just sort of the role that stablecoins plays in for a cryptocurrency exchange, and especially I think like a fiat exchange. We're not talking about sort of like the Binances and the Bybits of the world, which basically it's mainly crypto to crypto. I'm talking about more about these sort of like regional exchanges where we actually sit on top of sort of the fiat access points. So we're actually the point where basically the traditional financial world crosses with basically the Web3 world, right? This is sort of where the exchange happens. So this is the sort of the choke point, as you like to call it, that basically that regulators can have on our industry. And I think sort of at that point of cross, stablecoins plays a key role, right? And I think in our business, what's really interesting is that in addition to sort of providing general conversion or swap services, what we hope to bring are actually basically liquidity sort of for digital assets in sort of the local currency, right? Which in our case is pesos, right? And that's kind of that's what sort of where you see real value, I think, in cryptocurrency exchanges sort of in different regions, whether it's in Korea, whether it's in Japan, now you're seeing in Hong Kong, and Singapore, and Philippines, Thailand, et cetera, right? But sort of where we're coming from in the Philippines especially is that, cryptocurrency trading, probably that much interest, right? In terms of day-to-day use payment, payments, that's a much larger use case, right? But obviously we're not the biggest player in terms of day-to-day payment in the Philippines, but where we are kind of interested in is sort of where my background comes in is basically how do we solve this problem of cross-border payments, right? And where Philippines sort of is uniquely positioned in that is we're the fourth biggest remittance intaking country in the world. About $30 to $40 billion come into the Philippines every year, right? Brought on by about the 10 million overseas workers that basically, from the Philippines that work in different parts of the world, US, Singapore, Hong Kong, Middle East, on cruise ships, right? Even. So it's sort of like, and that's a huge problem in terms of helping that flow to come home, right? And then how do you, because these are basically the people in the world that basically get charged the most and probably have the worst customer service when they basically use financial services, right? Previously, sort of to COVID, they had to basically get money in their bank accounts, right? Or in sort of in the real world, they basically go to money kiosks, right? Pawn shops to pick up those money. But I think with the rise of digital wallets, of which we're one of, now they can basically get pesos directly into their wallets, right? They don't need a bank account. They don't need to go basically to deal with cash. But the problem is basically from the sending country, right? And this is where I think stable comes in. Because if it's ultimately whether you're sending money from the UK or Australia, you still have to cross with the US dollar, right? That's sort of like the fundamental FX that you have to go through. Local to dollar to basically local again. And on that rail, you have to use the SWIFT banking network, right? And we all know sort of the expenses and the settlement timing with that. And this is where I think the use case of stablecoin comes in, especially I think with USDC, given sort of fully backed, transparent, and regulated nature, right? Because most of our counterparties, and when we work with them, they're basically all regulated financial institutions, right? So we're not going to be working with someone that basically have risks that's unknown. So sort of in this part, because that's something that we learned is the counterparty risk, right? So here, what's really interesting then is that we're partnering with a lot of remittance companies that can actually take on fiat currencies in their sending country, and they basically get pesos directly into their Coins wallet, whether it's a business account or it's a retail account, right? I think that, and then all the benefits of that I won't have to say, but essentially, we're rebuilding sort of this global payment network almost, right? And we're rebuilding it not completely, but, semi-completely, like 80% there, independent of fiat rails. Because ultimately the money still kind of arrives in their traditional banking service sector, and it still maybe come from there, but at least sort of the pathway we can actually now have an alternative from that. And for us, the evolution of our business in terms of using it, we're actually using, previous to sort of stable coins, we were actually one of the largest ODL networks for Ripple, right? So XRP was actually a pioneer in using that. But the problem with using XRP is as a fluctuation. The same reason why Bitcoin's not being used for cryptocurrency, for remittance and settlement, is just fluctuation, right? It's too much risk in terms of price. You don't want to sit on a pile of things that changes in value sort of overnight. So I think whereas dollars at the end of the day is still sort of that value is commonly recognized, right? So I think this is where I think the stable coin then on a cheap chain, then makes a lot more sense. I think that's sort of the evolution of our business. But at the end of the day, for us, last thing I want to add is that all of this then basically brings more and more liquidity, right? In terms of USDC to pesos. Right? And that liquidity generally is good for Web3 development and as a whole, because basically you create this sort of local fiat currency to crypto sort of liquidity pool that basically more and more of our users can tap into. And generally with more liquidity, you basically get better pricing and better size, right? So spread and size, right? That's what you get to. So sort of for us, that's sort of the flywheel that we hope to build.
Great, thanks, Wei. Kev, what about how Reap has evolved, and then also touch on the markets in which you operate and where your customers are as well, and the usefulness of stablecoins and blockchain?
Yeah, so I think as Gajia mentioned, we started off as a very traditional Web2 fintech business. Issuing cards is not typically a blockchain-related activity, and that's where we really started off. But for us, how we moved into this space is really following our customers and really learning about how they wanted access and how they wanted utility out of their Web3 treasuries, most particularly in stablecoins. So we started working with a lot of these businesses that are decentralized by nature or crypto native, as people would call it, who had access to stablecoins. Their internal economy of the business, their fundraisers were all in USDC. And they were looking for ways to plug that into regular business expenses, right? These businesses are very similar to Web2 businesses in the sense that they have things to pay in terms of operating, in terms of travel, in terms of server costs, things of that nature. So we wanted to give them access to something that is a payment method that is currently plugged into a global network, which is the Visa corporate card. So what we did was we figured out how to work with them, really trying to understand what is the gap that we're trying to bridge. Previously, it would have been, I have USDC, I need to off-ramp, and then maybe I'll open a bank account, get access to some sort of payment method, and actually make payments to the people that I need to make payments to. But if you're able to work with a system such as ourselves, and there are other payment intermediary players who do this as well, who can directly accept stable coins as part of the currency of their economy, we are then able to give them access to a payment method that everybody else is able to accept. And that's how we bridge the gap. So for us, that's the thesis behind all of this. And I think when it comes to various different markets, we're starting to see customers from all over the world. It's not necessarily limited to certain jurisdictions. There is a pattern, however, that we've noticed from economies and businesses that want more access to global trading currencies, i.e. USD. So they are interested in having access to USDC for the purposes of global trade, cross-border payments, making transactions, and purchasing supplies from all over the world. And these are the type of businesses that we're working with, and we're trying to augment their usage of USDC by giving them access to that payment method.
Khibar, I know your business focuses a lot on Thailand. So you can talk a little bit about the market there, and then more generally, the evolution of DeeMoney and where you started.
I mean, for us, let me start with the evolution.
Sure.
A little bit easier. For us, evolution came through pain. It's
often does.
We grew from a little fintech to we're the largest non-bank payment provider in the country today. And throughout that journey, I remember this one time we had a little hockey stick growth period, and we're getting all these customers and all this revenue, but we don't have liquidity to do pre-funding. So we're crying, but we're laughing, right? We're getting customers are paying today to send money to the Philippines, for example, but the SWIFT network is delays and the money arrives 3 days later. I don't know what the pesos cost me 3 days from now, right? Pain. And through that pain, we went in and we've built different products and services, and we've adopted blockchain to enable real-time liquidity floats to solve our problems. right, is to solve those pain points that we're experiencing in our day-to-day floats. And Thailand, unfortunately, is not very digital asset friendly. For remittances, US dollar is still a major source of foreign currency for a lot of the banks and government. So they are very cautious in how they tread when it comes to that piece. But there are other places, like in Switzerland, where we've moved our liquidity service that allows us to be more creative and solve the problem we've solved for ourselves, for everyone else. So we've partnered with folks down in the Philippines, in the UK, in Korea, and we're able to give them liquidity in real time and solve the same problems for them and that we've solved for ourselves.
Great. Kev, I might go to you for the next question, if that's okay, and then get Wei to jump in as well. So I've spoken about the benefits of global access to digital dollars and mainstream adoption in some of the markets in which you guys focus on. What about some of the gaps that still exist? So what are your thoughts on any key technological advancements or infrastructure requirements that still need, I guess, to be built or to exist in order for the industry to fully leverage the benefits of the digital dollars and stablecoins?
Yeah, so I think from our perspective as someone who operates in payment services and money services, we often see the moving of value or moving of assets as a two-ended problem, right? You have to be able to send, you have to be able to receive. So I think in a lot of countries that want access to digital assets, or i.e. USDC, the access is still limited in a certain sense, right? Like where do they go to actually on-ramp and then be able to make that transaction happen? And then on the other side is how do they receive the digital currencies that they're trying to transact in? There are a lot of work being done on this at each individual country's level, in the sense that there are local players who are trying to set up infrastructure for the widespread adoption in the retail markets and business markets as well. But I do think there is a lot of opportunity for folks such as ourselves, which are more international in nature, being able to provide wallet infrastructure directly to payment intermediaries, local financial institutions to build on top of, so that you can start setting up these nodes directly in those countries, as opposed to waiting for each of the individual countries to come up with their own method of being able to do this. So we start thinking ourselves more as a network instead of purely just as like a service provider that sends from point A to B. We have to think about it from a global perspective, and I think that's very much aligned with what Circle is doing.
Great. Wei, anything to add?
Yeah, I mean, I think just to answer your question, I actually think this region more than any other has already adopted the use of stablecoin quite aggressively.
Yeah.
I mean, one of your competitors, like USD, like in the Philippines, like one of the biggest competitors that I see for USDC is actually USDT TRC20, right? I mean, that's like pretty much in most of the regions in Southeast Asia, and I think Greater China as well. So I think like from a user awareness perspective, from a usage perspective, I think the use cases are there. But the problem is, it's just that asset class, as I see it, will have a tough time crossing back into the real world, into the real regulated world that we would, that most of us kind of live in and operate in, right? And as I mentioned, as a sort of a regulated financial institution, which is kind of like the trend that we're seeing more so here in Southeast Asia as well, with Singapore coming out of regulation, now Hong Kong, right, Philippines with we've got about 10 or 12 VASPs in the Philippines, Indonesia, Thailand, Malaysia. Most of these countries, Australia, will generally have some kind of like pretty strict regulation in terms of how you want to access crypto and how you cross from fiat back into crypto, right? So, and I think sort of like, and that's where sort of like, I would still say like 99% of the money sits, right? And how that crossing happens and how we bridge that and make that seamlessly, and how we use then, and then how we apply then the use case of that stable coin to sort of facilitate, commerce within our region, I think is the big problem that we're trying to here to solve.
Touching on that crossing for a second there, you spoke earlier about sort of the recent adoption for that on-ramping or that getting on this side with USDC. What changed about USDC or within your business for you guys to move from the technology that you were using before to USDC?
Moving. I think the biggest thing that that we see is basically moving into basically a costless chain. That's really, really important, right? And then also starting to, I think, work with other sort of, and also the first one is, I think, is cost. Second one is network effect. Basically starting to work with basically other peers of ours that's in the region that really build sort of a network, right? I think that's really, really important because if you look at USDT, their biggest network effect is basically working with, all the big exchanges, right? The big crypto to crypto exchanges. And those guys are actually quite, I would say, have a larger user base, in Southeast Asia. So sort of that was the network effect that drove that use case.
Thanks.
I think for us it's more about we're not replacing because we're still using Swift at some point, but because folks like Circle have gone in and innovated and built the technology and the infrastructure to a point, we're able to use it to complement certain legs of the flow of funds. And I know some people are out there to looking to disrupt the world and change everything, but for us it's about efficiency. It works at this leg, it doesn't work at that leg. How do we bridge that? How do we make that happen? So it's a very pragmatic approach to how we take on this technology, right? And I think a little bit back to your previous question, one thing that is missing infrastructure-wise is actually a lot of know-how. A lot of what I see is you've got a lot of decision makers who are very good at, for example, fintech. They've been doing this for 10 years, 15 years, banking, and they understand digital asset, but they don't properly understand it. So when they're thinking about products and services and how to solve these problems, they're trying to fit like a circle through a triangle, excuse the pun, And the way you do that is you shrink the circle compared to the triangle, which means you lose a lot of the value and it becomes more of a gimmick at some point, right? So getting that together, building that know-how in the right place at the right time, in a way, enables these more pragmatic approaches of bringing this technology where it could fit in. Because, we talk about blockchain as a technology, but at core, it's very much of a concept. It's a mindset that you need to adopt and internalize when you're thinking about the value you want to expose to your customers.
That's probably a good segue. Speaking about value and exposing that to customers, what about adoption, enterprise adoption versus end user adoption? What are the risks? Are they different? What are the barriers associated with with those two user groups? Kev, I know you guys are more focused on enterprise. Love to defer to you first.
Yeah, so I think for us, we work a lot with corporates and folks who have access to a treasury that they want to be able to connect to the real world via a payment method that is accepted. What we typically see is that it's not similar to consumer behavior where they can test it out and have a very lightweight dip their toe into the water and see how it works. For corporates and enterprises, they really want something that is more long-lived and applies across a variety of use cases. If you think about these enterprises, they have multiple stakeholders. It's not necessarily just the finance team that we're interacting with. They want things that are actually usable by their operating teams, by their salespeople when they travel. So it makes a lot of sense when we think about it holistically from a internal treasury perspective and how we can really adapt our product suite as more of a software, right? We think more about technology. We think more about actual long-lived value. That's the way that I think we've been approaching this problem.
Wei, you're thinking deeply.
I was just thinking because I think, obviously I talked about sort of like the retail remittance case earlier, but I think there's another group of people that I think could be super interesting that we're seeing right now is basically just SMEs. Probably it's true for the Philippines, probably it's true for Thailand, probably maybe it's true for Indonesia, I don't know, but at least sort of we're basically seeing a lot of young people basically building virtual businesses. These are basically, whether they're streamers, whether they're influencers, or whether they're basically, selling their Web3 services, to, companies and buyers in the US or whatever, right? And a lot of times, we started seeing them basically, collecting payments, right? And a lot of the payments are just still being done not through the banking network, but actually through sort of like, credit card to a PayPal account that they have set up, right? Like for the Philippines, like we're not on the Stripe, right? So we can't really just sort of set up a Stripe account. So most people still kind of use PayPal right now, right? And we know the fees there, right? So sort of like, and just for me, it's just sort of like, hey, can we bring value to these, sort of SMEs that are based in the Philippines that sell stuff to America? Right, and I think that's a pretty simple concept to understand. But the thing is that we need like sort of a corresponding partner in the U.S. that can sort of land that part of the ship as well, right? For us to sort of bring our to bridge over here, right? And I think that these are some of the things that we started exploring, with our partners here at Circle. So and we hope to bring some of these successful case studies when we talk next time.
Great. Khibar, anything to add on the considerations for the different user groups that businesses are focused on?
Our liquidity service, we only work against corporate customers, so fintechs and money service businesses exclusively, and our payment side is only retail customers. And retail customers are expensive to reach out to educate, to engage, and you need a regulator who's more ready to allow you to engage with them. So that is going to take time and resources, right? But our experience with corporate customers is, once you get some of your regulatory and the risk mitigation stuff out of the way, and you focus on value. We don't sell the technology per se, how we do things in our back end, and if we're using USDC for this leg and this banking rail for that leg. It's just, listen, you need liquidity in the Philippines right now. Here you go. You need liquidity in Korea right now. Here you go. You can focus very much on that value proposition, on that product. And the good thing with corporate customers is they can pick it up and they can scale it up. All right, which drives that adoption in a way, but it doesn't give you the same marketing and PR push, but the value is there, the use case is there, and the long-term value generation, I think that's where it starts.
Bonus question, since we have these experts on stage, we've spoken about sort of some of the markets in which your teams focus on. What about some of the largest economies in our region, right? So China, Japan, India. How do you think our industry should think about those markets and the technology that we've spoken about today?
So I can speak from kind of our customer's perspective. And one of the use cases that we've been talking about is cross-border trade, being able to make payments, purchase supplies. And a lot of that is still currently inbound into our region, into China, into a lot of Asian countries that are still supplying the rest of the world. Specifically, those transactions, the purchasing country would love to have access to stablecoins to make these transactions a little bit more efficient, especially if these purchasers, the buyers, are located in a location where they may not have as strong banking infrastructure or access to SWIFT or access to USD. So that's where this becomes really powerful. It becomes kind of a proxy for them to be able to get onto the global stage and make transactions happen to our part of the world and make purchases into China, into Japan. So that, I think, is the biggest opportunity that we're starting to see.
I don't know about Japan, but we do a lot of work with India and China, right? And with China, I think once the CBDCs come out, innovation that can bridge into that CBDC can access local financial infrastructures and build those ecosystems and allow for a multitude of variety to come. That's something we're very excited about, actually. India, on the other hand, they are very tight. I think you do whatever you need to do internationally, but once you hit the Indian market, you find an off-ramp, you integrate with local payment networks and local fintechs and banking rails to do the behind-the-scene logistics that you need to do. I think you still are going to be stuck with fiat in the Indian market for a while longer. While in China, I think as long as they have the CBDC, that they know what's going on and can integrate with the rest of the economy, I think that's possible.
Yeah. So kind of relatively familiar with with all three of the markets you mentioned, just given the previous work that I've done there. But I think just from a trading perspective, I think India might open up as a country much sooner than China. Just from a licensing trading perspective, this is the trading of crypto. I think China is testing out the waters with the licenses that they're starting to grant out in Hong Kong, but that's going to be a slow and gradual process. But at least I think that'll be the first sort of point of access in terms of fiat to crypto in Greater China, right? In a region that is under sort of like China's governance. In India, I think we may just throwing it out there, we may have seen we saw the G20 sort of conference in India where they actually what is it? Modi actually asked for a proper paper, right? And the conclusion is you can't ban this stuff, right? So you might see something coming that's sort of we're starting to seeing some conformity in terms of vast regulations around different regions of the world. So maybe something's coming in India next year, right? That's sort of just for like, and I think the second point in terms of sort of like how do we see the facilitate the movement of money? I mean, I think the biggest exporter in the world is still China. Right, and then if you can sort of be a part of that value chain in terms of helping Chinese exporters to basically either bring money home or keep the money safe or store that money somewhere, then I think that's a big problem to solve. Right, like one of the things that we're looking at right now, is we recently started grandfather for trading and by trading I mean sort of vast for crypto businesses in Brazil. So basically you see a massive amount of exporters selling stuff into Brazil. Right, and buying stuff from Brazil, right, both in terms of electronics and from a selling perspective, and then agricultural products from a buying perspective, right, and then you're basically seeing BRL to USD to stablecoins, and then back into either their bank accounts in US dollars or back into some denomination account in Hong Kong, right? I think that flow is definitely interesting, right? And then you're basically seeing China selling stuff all over. In the Philippines, we're working with vendors basically that are selling electronics, right? But obviously these aren't easy businesses that you can sort of break into, right? Given that they're still domestically Chinese companies and they have to follow certain rules. But I do think that the licensing regime in Hong Kong will allow for these businesses to have their companies or their exporters be based in Hong Kong to be able to start, play around in crypto and in digital assets and in stable coins.
Great. So last question for you all, and please jump in. What are you personally and what are your teams most excited about for our ecosystem and for your businesses in the year ahead in 2024? And if you don't have anything, then which part are you most excited about for this week? Where you go, you're on a roll.
Look, man, I think I'm actually just really excited to get the product out to market because I do think when your value proposition works, people come and they want to do business with you, right? And then, our value proposition is basically how do we get to, as one of my president David said, is basically how do we get to T plus 0, right? The closer your product can get to there, then, more people are going to use your product, right? So.
For me personally, I'm a techie, so I'm very excited about the cross-chain transfer protocols. And because we're in fintech, we're very excited about all these banks who are coming in and picking and saying, maybe we'll give this a go, because that's been very painful to get banks to understand, listen, this is not all rough edges, there is some substance there, So, the good thing with the bear market, the crypto winter that we have is a lot of the bad stuff is dying out, right? And a lot of the value that is at core is getting a chance to shine, and regulators and banks and big financial institutions are coming in and seeing that core. I think that is for me the exciting part because it allows us to build real value over time.
I'm really excited about this concept of closing the loop for stablecoins and digital assets and currencies. Us as someone who kind of bridges stablecoins into a traditional Visa network, it can often be seen as we're taking money out, right? But at the same time, we're starting to see networks like Visa and MasterCard to be able to settle in USDC. They're running a pilot with Crypto.com down in Australia to do this, and are also working with acquirers on the acceptance side to be able to do stuff like this. So I think that's when the utility and the adoption really starts to become more efficient, right? You're not just flowing into us, we're able to flow out and we're able to connect into this circular loop pun again, to really make things more efficient and really achieve some of these things, these first principles around payments, speed, efficiency, transparency, actually make that happen. So it's no longer just segments of the payment legs that we're identifying as the most efficient that we can use stablecoins for. It's actually starting to apply to the entire circle of payments that we're actually creating.
Great. Thank you. And with that, I think I'll conclude by saying to the teams at DeeMoney, Reap, and Coins, many of whom are in the room today, thank you for your partnership, and we're incredibly excited to be working on solutions now and right into the future with you all. And to Kev, Wei, and Khibar, thank you for joining us today, for your thoughtfulness and your insight. Round of applause to the gentlemen.